I would like to highlight how stock splits, affects liquidity and trading volume. How does stock splits affect liquidity and trading volume in a given stock? So we discovered that stock split number one will increase share counts. That's the fundamental effect of stock split. It will increase share counts. A stock split increases the total number of shares available in the market while reducing the price per share proportionately. For example, in a 2-for-1 split, the share price is halved and shareholders receive double the number of shares. For instance, if the share price is $10 and there is a 2-to-1 split, you discover that that share will split into two. Instead of $10 per share, you now have two shares of $5 each. All right. So in a case where the company does well and the share price increases, let's say if it doubles, you end up having what? 10 here, 10 here, that's $20. Number two, it enhances liquidity. It enhances liquidity. So in this case, lower price means lower accessibility. All right, lower accessibility. It means more accessibility. So reduce share prices makes the stock more affordable for retail investors, potentially increasing trading activities. It will not scare away, investors on a tight budgets. So it encourages investors, to buy, and by so doing, that's increase in trading activity and trading volume. There's broader participation. So increased volatility, increased affordability can attract a larger pool of investors, boosting market participation and liquidity. More investors, are attracted to the lower price, and then they will tend to buy the shares compared to when the price was very high. Number three, higher trading volume. Stock splits will then encourage higher trading volume. So in this case, there's this post-split activity. Post-split activity. Stock split often leads to a temporary surge in trading volume due to heightened interest from retail investors in the short term. Whenever there's a stock split, people will now rush to buy, and that will increase activities, will increase trading volume because of the entrance of new investors into the stocks. And there's market momentum also. Market momentum. So the increased attention can result in momentum-driven trading, further boosting volume in the short term. It will increase the volume and the momentum of the trade. So it will boost volume in the short term. Number four, narrower bid-ask spread. Narrower bid-ask spread. So with improved liquidity, the gap between bid here means buy, and ask means sell. So the gap between the bid-ask prices often narrows. This reduces transaction costs and improves market efficiency for investors. Generally, when the price becomes it's lowered. The gap between the bid and the ask is lowered, and as the gap lowers, that will reduce transaction cost. It reduces the fee you pay when you buy or sell those stocks. Please subscribe to this channel if you've not done that. And give this video a thumbs up. Don't forget to share as well. Number five, improved Price stability, improved price stability. Increased trading activity can lead to more stable price movement as larger trade volume, help absorb market shocks. So you have, you know, increased share outstanding, and so it improves liquidity. It improves stability also. And, a large volume will not impact the stock negatively or even positively as the case may be. So higher volume will not affect the shares, positively or negatively. Number 6, there's that long-term impact. Long-term impact. Over time, trading volume and liquidity may stabilize as the initial excitement fades, depending on the company's fundamental and investor sentiment. On the long term, you discover that everything becomes stable. The excitement over the stock split will fade, and everything will now, go back to normal states. It all depends on if the company is doing well or not. If the fundamentals are okay, and then if investor sentiments are also at a normal level, and everything will come back to a state of normalcy. So stock splits are an effective tool for improving liquidity and trading volume, making the stock more attractive to a broader audience. However, this benefit hinges on the underlying performance of the company fundamental, the underlying, fundamentals of the company. It's not just announcing stock split, but how is the company doing fundamentally? That's the most important factor here when it comes to the impacts of stock split on liquidity and volume.